I appreciate you checking out this video from NetPicks. And today we're going to combine trend lines with the Awesome Oscillator and hopefully give you a trading strategy that you can develop. And it's actually built on how markets move. When we're talking about the Awesome Oscillator, it's actually a measure of momentum in the instrument what you're trading. Trend lines are going to help you determine not just the trend, but also the rhythm of the market. And once we see a change of state in the market via the trend line breaks, plus a shift in momentum, it gives us an opportunity. And I actually have a complete guide to trading the Awesome Oscillator. The link is above. And let me just say that there are some purists out there who just can't think outside the box when it comes to an indicator. Look, you can find a use for any trading indicator outside of the main strategy that was originally designed by the developer. All right, so start thinking outside the box, and I think you'll find your trading will improve. And we also want to ensure as traders, when we're talking about trend lines, that we have a set way of drawing them. You can click above for complete trend line drawing rules that I like to use, but in brief, I try to ensure that the last swing into the high or the low is touched when I'm drawing my trend lines. So when we set the charts up, it doesn't matter what time frame we're using. Just keep in mind that the lower time frames in any instrument, there's a lot more noise than the higher time frames. And with the Awesome Oscillator, there are no settings to adjust unless you're using a custom built indicator. And this is a daily stock chart. You can see how I drew the trend lines there. And yours may not be exact, right? You may have some areas where price poked below a little bit, and that's fine. As long as there's no price acceptance and significant price action below the trend lines for an uptrend. The reverse is obviously true for downtrends. If you're getting a lot of price action below or above the trend line, depending on which way you draw them, you're going to have to redraw them. Now the rules are quite simple. And first we want to know is, what are we looking to accomplish with this strategy? At its most basic form, we're trading reversals into what hopefully is going to be a new trend. But we can also use it to trade continuations back in the direction of the trend. So the basic form is we see a trend line break, and then we get momentum to the upside or the downside increasing as shown by the oscillator. Now we're talking about triggers. To get into the trade, we want to use price action. All right, so we want to see a downtrending market. This is for buys. We want to see price break over the downsloping trend line. We want to see the oscillator turn green and begin to rise up. Place a buy stop above the high of the candlestick that's indicated by the green bar on the oscillator. Okay, the sell setup, just the opposite. We want to see price break under the trend line, right? Because it'll be an upsloping trend line. We want the oscillator to turn red, begin to fall. And we place a sell stop below the low of the candlestick. This is the same chart that I showed earlier with the trend lines. Just put the oscillator on it. The first sell is on the left. It's $260.58. Price breaks below the trend line while the oscillator is red. It's heading downwards. In the middle, it's $230.19. Now the entry price has been scaled down as price retraced. It found support around the trend line area. The oscillator is green. The buy stop placed and gets triggered. The last setup triggers at 261.60. Now on the break of the trend line, the oscillator was still green and price retraced. Price did not break back over the trend line. Okay, so our sell is still on. The Awesome Oscillator turns red and falling as the price action triggers the entry, right? The sell stop. This is Bitcoin. Now, if you're a perma bull like I am, you want to look for entries into the uptrend. Here, trend line break after corrective move down. The oscillator turns green and it's rising. And the entry is 42.5. That's your buy into Bitcoin. Now, if you trade options, this is a shorter time frame. This is a recent play on NVIDIA where you would have had to use puts looking for further downside. Price broke the trend line. The oscillator turned red. No trigger short. Price rallied back up. The oscillator turns green. So our entry is off the table. But then we get a brief range. we get a red oscillator, and we look to trade the break of 319.74. Now, the condition of the market, right, a trading range, you can get chopped up in there as whipsaw takes place. Now, you're going to see that a lot more on short time frames, right? The shorter the time frame, the more noise you get. But you can easily scan through your charts and discard the ones that are in current trading ranges. But this one, we do expect some consolidation after a break. And the good thing is, we're only looking for breaks short. What does that mean? We don't take any trade to the upside. For example, we're not going to bracket the range like this and then play anything to the long side because we're looking to play short. So when you're scanning for an instrument to trade, you may decide just to skip any that are in a consolidation. Now, there are plenty of things to trade, right? So you don't have to be stuck on just a handful of instruments. So we'll find something that looks a little bit easier to trade. Your protective stop, there are a number of ways to place it, right? For this strategy, you might want to consider a location that respects what's behind these prices, right? Momentum and change of direction. That's why we're getting into the trade. So we do expect price to go into our favor once we get into a trade because we've got momentum increasing. There's been a change of rhythm in the market. And our entry is only triggered when the price moves in our direction. So the logical location is below the low or above the high for shorts on our setup candle. Here, you got the run into lows was a series of lower highs. So the trend line break is going to be far from the low of this swing down. And that's the daily chart. Once price broke the trend line to the upside, we trigger into the trade. Our stop would go below the low of the setup candle. So you see price advance, we get a pullback. It challenged the stop, didn't trigger it. Some traders would actually be out of this trade depending on how they set their profit targets or how they manage their trades. So we're talking about profit targets, like the stop. There are many ways to set your price targets. If you're looking for momentum setups, shooting for a 1-to-1 reward to risk ratio can work pretty well. In fact, depending on how you manage trades, you may never take a full 1 hour loss. Let's take a look at an example here. Let's say you're day trading crude oil. Price action overall is bearish. And the next morning, we have a gap up. And until proven wrong, we're still looking to short. Our setup and our trigger happens. And using the high of the setup candle, we have a 37-cent stop. So our profit target would be 37 cents plus your commissions to the downside. Now, once the trade's heading into your direction, by breaking new lows, you just inch down your stop. So this ensures that you don't take a 1 hour loss at any time. This trade here actually will pay out for a full 1 hour win. So managing trades is important. Many traders that set profit targets, they have a tough time when price runs while they just sit in cash. So you might want to explore a trailing stop method. That begins once your price has gone to its 1 hour target. Your trade could go to break even, your trailing stop method's triggered, whatever you use for that. But just test out to see if a trailing stop loss helps or hinders your ability to make profits. Because you may find that you get break even results a lot or slight gains on those remaining positions before your trailing stop moves enough to lock in bigger profits. Okay, so make sure you test that out. Let's look at a weekly stock chart. Number 1, price is in a bigger picture downtrend. Number 2, price breaks above the trend line with a green and rising oscillator. The trade entry follows the lower highs until triggered, as you can see. Or if it breaks below the trend line, we're out, or the oscillator turns red, we're out. Okay, so when any of those happen, we don't get into the trade. Look for a new setup. So this is an example of a 1 hour target that's met on the day that the trade got triggered. Now you may find taking your 1 hour profits is a much more relaxed and successful way of trading. Okay, so just test it out. Let me know how that goes for you. Now, one thing is to be mindful of big bars. So whenever price makes a large move in one direction, we'll often see mean reversion occur. This is a chart of lift. Price breaks the trend line. The setup is valid. But the size of that candlestick and that 1-day ATR spike. Okay, this is a perfect example of when you should be expecting some type of rally against that move down as mean reversion takes over. Now, you could take the trade and end up scaling your entry under the high lows of each candle. As you see, they keep getting higher. But I don't recommend that because remember, we're trading momentum in the direction of the break. So given the size of that candle that breaks a trend line, you might want to assume that the momentum has been blown off. Just wait for a new setup. Now you could use an upsloping trend line under the lows, and as long as that main signal is valid, you can look to play a new momentum trade to the downside. Now I like momentum trades, okay, and I understand the need for taking profits before mean reversion begins. And that's why for this strategy, I would not use a trailing stop method of exit. Right? Give me my 1 to 1.25 hour profits, and very rarely where there'll be a full 1 hour loss. But you got to test that out. Okay, now there's some nuances that you're going to learn as you investigate this strategy, okay, and make it your own. Here, the swings that are noted with those dashed lines, they're not very clean swings. So would you use these swings to trade from, or would you wait until the overall directional line breaks to the upside? Even worse, look at the spikes on the right. Right? How would you manage trading those? So those are a few things that you have to decide as you make this strategy your own. Okay, nuances matter. But in my opinion, it's based on sound concepts, right? So map out some trade rules, give it a try in a back test, and see what happens. Thanks for watching.